Okay, guys, I think we can start. So, officially, welcome to this event here today. Become an expert in trading one forex pair. Um, so, how is everybody? All up for this? Everybody has like enough energy today because it will be a long night. Not, I mean, just trying to scare you. Not too long. I'll try to make it really as fast as possible without stress. Okay. Great. So where are we from? We have people from all over the place here. Um, I'll see. Oh, Norway. Okay, I know we have USA and most countries of Europe. Denmark, Netherlands. Wow. Dracula is also here. There we go. Anybody from Atlantis? Usually Canada. There we go. Timbuktu. Great, great, great. Some aliens in here, maybe? England, yeah, there's some aliens. There we go. Australia, okay. Perfect, perfect. Oh, yeah, that's great, great. Well, I'm from all over the place. Okay, beautiful. Great, guys. Let's start. Um, just to make sure you can all see my chart, right? You can also see the mouse moving. You can hear me for sure. We know that. Yeah, it should be fine. This software is sometimes funny. It's a really good thing, but sometimes it's acting weird. So in case you don't see my mouse or you don't hear anything or for some reason the whole thing goes down, just log in or stay logged in. Okay? Because there are many people in here and it will be, sometimes it could be funny. Okay, there we go. Jeff is also there. Everybody's here. Perfect. So let's start. First of all, we don't need the charts right now. We get into that very, very soon. Let me first explain how this will work today. Now, how and why to trade only one forex pair successfully. Learning to trade one forex pair will give you the opportunity to be focused 100%. Okay? What does that mean? I will explain here. Let me just get into details immediately because I received a lot of emails and people are asking, hey, why only one? Why only one? I'm explaining this today and it's a very, very powerful thing to do, especially as an exercise. And it doesn't really matter if you are trading like since yesterday or if you're trading for many years, if you're doing great or you're just, still fighting. This exercise is very, very powerful, and most of the guys that know me and know us here, we don't share anything if we don't already know it works. Yeah, so it's not something we figured out yesterday. I was trading, and most of you know the story already. I was trading GBP JPY 1 forex pair in 2007, 8, and 9 alone, like only one pair, not just because I was too lazy to look at other pairs. It was just no reason to trade anything else because that pair was so volatile and gave me so great setups that everything else would just distract me. Okay, and I figured out how powerful it can be if you focus on one pair, on one pair or one product. Some people don't trade forex, they want stocks or whatever. You can focus on one good product, getting good at this, combining all strategies you like. Okay, all strategies you like, and then learn from the mistakes, make it really good, and trade one pair and be successful for whatever, for how long you want to. Okay, now everything is recorded, by the way. Do me a favor, everybody, because there are many, many people in the room. I will give you like in between time to ask questions. Okay, so when I explain something, and I'm finished with explaining, then I'll ask you, is there anything you want to ask? Then you ask the question, because I cannot look at the chart, explain things, and at the same time look at the comments. Okay? Great, thank you for that. So here is why, as I said before, no distraction. I might have some typos here because I did that like last minute here just for you to make it, you know, written. So it's sometimes good to read first before we get into something. What does that mean is, like, when you look at one forex pair, something that is moving, something that is volatile, and you look at a pair that maybe at that point is not that great, what you do, immediately switching to something else to find something because you really want to trade. Yeah, you sit there and you say, because I'm sitting here, I need to trade. So automatically what you do, you check everything, and you miss out a lot of details, especially when you're new to it, or even the experienced people sometimes miss out a lot of things. Okay, so no distraction, mind relaxing, all those things go hand in hand, because no distraction, you will also be more relaxed. Okay, more relaxed, and then you can focus much better. Less stress goes with that, less fear. If you don't have to jump around, or you have a, let's say, a losing trade and you want to make it back, you look for a different pair that maybe is more volatile, and you forget about your plan, about your rules, you make it all like really complicated. Okay, I'm not saying that you have to trade one forex pair forever, but when you get good at trading one pair, oops, sorry, I forgot to switch that one off. Sorry, should be fine now. So when you get good at one forex pair, and you learn how that thing behaves, you know, and what you have to do to make the profits, then it's much easier later on to add more pairs. Yeah, just to make that clear. Easier planning, what I just explained, you can plan everything much easier if you have one pair. You don't have to look at too many, as long as that pair is worth trading. We get into that. As I said, applying multiple strategies. Maybe you are a swing trader, you love swing trading, or you love day trading. Okay, when you look at one pair, you can combine all the time frames the way we like to do it here, the higher and the lower, and find setups using different strategies. Yeah, styles, not strategies. I mean like styles, like day trading, swing trading, or scalping. You can combine everything depending on how much time you have and how much time you want to spend. Okay, because when you focus on one pair, it's very easy to combine, if you have enough time to combine the styles, and because the price will either range, okay, or it will trend. And so you either use some ranging strategies or trending ones, and if it doesn't go up, it will go down, and then you trade down, and you follow the rules. So in the end, if you know what you're doing and you have your plan ready and you have your you know, everything in place, you can only end up making profits, really, as long as money management is in place as well, right? This is one of the most important technical parts. Oops, the thing popping up here telling me that the room is full. It's okay, or everything is recorded anyway, so if you have to log out, or your internet goes down and you have to log in and you cannot log in, it's probably because it's full, but you can watch the recording later on. Okay, now easier to learn from your mistakes. I get into that on the chart, because really you have one thing to look at. You will see all the details compared to if you have to look at 15, 20 charts. You do a mistake, you forget about the mistake because you see a setup somewhere else. And forgetting about a mistake is a really, we can use the word bad thing. Because what happens, we do a mistake, we forget about it, and we do the same mistake 2,000 times. So after a couple of months, months we still don't haven't figured out what's going on. And if you would have let's say tracked all that, you would have seen that many mistakes you do are mistakes that are repeated, things you do again and again, and you don't want that. Yeah, if you do a mistake, okay, do it once, twice, three, four, five times. Then you have to remember it. You have to really know that this is a mistake you already did. Don't do it again. There are other mistakes you can do. There's so many others. Okay, so get rid of one, getting the results. If you always make the same mistakes, you never figure out what is going wrong. Okay, trading one pair is helping you with that a lot. Faster and easier tracking of trades. Makes sense, right? One pair, everything is faster. More discipline. Of course, you're not distracted, so discipline is easier to sustain. You make better decisions for sure, because you only watch one pair, and if you follow your system or you follow our system here, then you know what you have to do, and it's really easier on one product. You also will spot trades easier again because you're focused, because you are more disciplined, and you're not distracted at all. It all goes hand in hand, as I said. And now, understanding and guiding your emotions better. Like when we say controlling emotions, I use that word controlling very often. It's because of my bad English. What I really meant is guiding your emotions, because you don't want to really control them. I don't think, or I just don't feel that it's possible that we can control it, but we can try to guide them better. Yeah, I'm 43 years old. I maybe hide sometimes the emotions, but I didn't control. Yeah, so hiding is kind of self-cheating, okay? But guiding, this is something you can do. I don't know if it makes sense to you, the difference. People that trade for a longer time know what I mean. Yeah, you're not able to easy control, but you can guide them and get rid of the pressure a little bit differently. So very important, especially when you have one pair, it's easier to do. Learning and understanding the behavior of that pair better. This is so important. You can, it's probably you don't understand right now, but each and every forex pair, and also other products on the charts, behave differently. They behave differently at news, or during like ranges or trends. They all have the same setups. They all do 1, 2, 3s and ABCs and breakouts, but they still look differently, like they have a different haircut or something. Yeah, they look differently on the chart. And when you focus on one pair and you get really good at that, okay, you will see this. You will start seeing the little tiny differences sometimes that can make the difference between like an entry you take or not. Okay? And there are so many other little things that you will figure out yourself by doing this. Okay, you will see. But I think there was enough to try to not convince you, but make you understand why trading one pair can be so powerful. Okay, so are we all good with that? Do we have any questions before I continue? Now you can shoot. Yeah, if there's something, okay. No, I don't trade one pair right now. I trade many products, but when you have trouble with your results and you need a solution, then trading one pair can be it. Okay? Even as an exercise to get better at what you do, even if you look at 50 products. Even getting better at that, you can do this exercise or this way of trading separately from what you're doing. Like you do two different things. Okay? Clear, clear, clear. So everybody is ready, I guess. Perfect. Okay. Now, simple but important steps to long-term success. I always say long-term success because you don't want to have fun with that a day or two. You want long-term to make profits for as long as you want to trade. Okay? So, I will get into that. There's a question how to practice patience and discipline. Yeah, that's a good one. Okay, that's the most important one. So I get into that also today. One sec, guys. Okay, people trying to log in. I'll get like messages from all over the place, but again, it's recorded and later on you can watch, okay? Now, of course, it works with volatile pairs much better. If price is moving, we can make more. If price is not going anywhere, we make less. Yeah, it's just how it is. Okay. Okay, now choosing a trending forex pair. This is what we are going to do together, and I show you how you do that. Yeah, we go over it together. The reasons why to choose some pairs and why to leave some alone. This is what we're going to do. Okay, and that goes with explaining the basics of the system, of course, as well, because there are many people that don't even know how we trade. Yeah, and then we also get into choosing the strategy in trading style. Therefore, we apply day trading and swing trading. We go into two styles, not three. We don't go into scalping because it will be too much for one session, way too much. Okay, and it will be not easy for you to digest at all, but we are going to do a lot. Now we also the other step which you have to do is creating a simple but powerful trading plan to be able to trade this one pair strategy. Okay, then of course you have to follow the plan 100%, and we have to track everything we do to fix mistakes to get the results we are looking for. Okay, those 5 things is how it works, and we start with those two today. Okay, and when we are finished, and it is a lot of information but it's all recorded, so no problem, I'll tell you what we do with the rest. Okay, so any questions here, or can we start? I don't think we need a break already, right? Somebody said something about a break. We just started. Okay, let's start. Great. First of all, we open up our chart. What we do, or what I do, and many of our members, is technical trading in combination, of course, with discipline and handling emotions and our psychology, right? So in order to make that easier, we use charts to get into trades, because charts and price action is telling us what we have to do. We just have to watch and we just have to listen. And if we get it right, after a while, we know exactly what we have to do. Okay? So, who is not familiar at all with a Spartan basic system? Just give me here or yes or whatever. We always go over the basics, whatever we do, always. But if you're not, we'll do this, of course. Okay, I see a lot of people don't know how we do things. Okay, okay, okay. Doesn't matter. Okay, great, guys. Skip them, Bill says. No, come on, Bill. Um, the system or the way we trade has to do with volatility, with direction, main directions, and ideally trends. Of course, if we have two ranges, okay? What we want to do is taking advantage of a volatile market, okay? Um, what I use to make it really easy for, or what we use to make it easy for our eyes, for our brain, is simply Heikin Ashi candles or Heikin Asai candles or whatever. If we have a Japanese guy, you can tell me how to say it or how to spell it. I never really knew. So Heikin Ashi candles is the way most people say it, not Japanese people. Those candles are showing the power between, sellers and buyers in each candle. So white, that's the color I have chosen here, means buyers are stronger, and red means sellers are stronger. That's it. Okay. And if you use those candles, it's filtering out most of the up and downs you get with the classic candles. So you don't see like one white, a green, a spike, and all over the place. This is filtering out most of the noise, and it gives us a clean direction, and it will also give us setups. Now you don't have to use those if you don't want to, but the Spartan traders all use this template, okay, the way I'll do it. And how it works is you just add to your chart, and I'm using MT4 because MT4 is really for free. Everybody can use it. I open an account here with, it's called IC Markets. It's not marketing for them. I don't know how good they're really, but on IC Markets, if you want to open a demo account, they have low spreads on almost everything except of course, metals and stuff. But forex pairs, like the spread is 1, 2, 3 pips. Most of the pairs, okay? If you have a broker that has less, good, especially for the day traders and scalpers, okay? So MT4 account, MetaTrader 4, it's for free. You don't have to buy it. You can download it all over the place. And what we need is, or the way I do it, is a black background. Jeff, you can probably send people the template. The guys that don't know how to set it up, we can just send you the Spartan Trader template, and you put it into the template folder on MT4, okay, later on, so we don't have to do it right now. I explain that to you anyway. So I do a black background, white candles or green, whatever you like, or blue for longs and red for short, yeah, for the sellers. I use only one indicator. This is an EMA, moving average exponential, and we're having four different settings. We have the 200 EMA, which is the white one, okay? This should be sometimes exponential, okay, it's there. We have the red one, which is the 36 EMA. We have the blue one, which is the 12, and I have another one which is the 633, which is the gold or yellow one. Okay, that's it. We don't need anything else. No indicators, no filters, nothing. The only thing we need is price action, setups, and we draw our trend lines. Okay. Good question here. Why these strange numbers? I don't know which numbers are not strange, but 200 is an EMA that many traders look at, and they're also helping us that we use them for major support and resistance in combination with horizontal support and resistance lines. The same we do with the 633. I'll just have seen over time that those EMA settings helping me most. Okay, so that's why I chose those. The 36 EMA is our trend following EMA. It doesn't matter on what time frame. Yeah, it's again, yeah, you said it based on experience. The 36 EMA is a trend following EMA. So simply, as long as price is over the 36 EMA, generally we are in an uptrend. If it's below it, we are on a downtrend, generally. Okay? The 12 EMA is a volatility EMA, which means if price is moving up or down strong, it will not break that one. It's always like sliding below it. Remember, all EMAs are lagging and late indicators. They will always follow. You see, here is the 36, price is up here. So if that would crash now down within 4 hours, this would not be able to go up. It's always a little bit late. But that's the good thing. It works great as a trend line because it's a trend following EMA. If we try to draw trend lines and we cannot figure them out correctly, I will show you soon here live, then the 36 is acting as a trend line for us. That's all. It's that simple. Okay, guys? And again, Jeff will send you the Spartan template afterwards. You're on the list and you can use it immediately. So don't play around right now with it. Let's just go over what we have to do today, and later on you can spend time and checking out charts if you're not used to that template or to the Spartan system at all. Okay, guys, just ignore that for today. Really, it's too much. We have a question here. It's money management indicator that filters out, like that tells you in percentage the risk we take. Okay. Okay, guys. Any questions about the template, about how to set it up? 633 EMA, 200 EMA, 36 and 12 EMA. That's what we use in combination with high Key Ashik candles. Any questions? I want to get over the basics step by step so nobody is, things that we're going too fast. $12, $36, $200, and $633. Yes. I explain all the functions when we go into this system. Okay, guys? I'll explain again what they all do. As I said, you could also use classic Japanese candles, but I'm not in favor of this. It's too unclear, let's say. It just looks better like that. You have to get used to it. For sure, if you're not used to this and you're used to strategies like, I don't know, pin bars only or dojis and all that kind of things to trade, then that will be very new to you and it's not easy to go with. So it needs time. Okay. Okay, can I continue then? Okay, great. Perfect. Now, to choose a pair before we get into the strategy, it's very simple. What we want, as I said before, is volatility. We want the price to move. When it goes somewhere up or down, we can get in, we find signals good and easy, and we can stay in for longer, which means we maximize profits. Okay, so our strategy is based on getting in between scalping, day trading, and swing trading. But even getting in a day trade on a low time frame, if the higher time frames give us the opportunity and they'll really look like there's a lot of space and room to trade, we always keep a position as long as possible to maximize profits. Okay, it's simple as that. So we're not going in to get 10 or 20 pips. This is stuff that is just, for people that get sucked into that broker's marketing thing, where they tell you to trade all day long, trade 100 times a day, go for 10, 15 pips, and so the broker can make a lot of spreads in return. Okay, what we want is to get in. I don't care if you want in a low time frame, but stay in if possible and keep a position, at least a part of the position, as long as price is going your way, like the big guys are doing. And what they are doing, and I'm talking about the big traders with a lot of money, they are not looking at a 5-minute chart, 1-minute chart, or 15-minute chart. They don't even look at a 1-hourly chart, and most of those guys not even on the 4-hourly chart. What they do is they make decisions trading on a daily chart, on a weekly, and on a monthly chart. Even if that for many of you will be a big surprise, that is how it works. From far away, meaning higher time frames, looking at the real direction, making good decisions, and staying in for a long time while everybody else is trying to snatch 10 pips. Okay, so you have to understand that that is how it works, and that is how you can make a lot of money. You can also do it on the lower time frames, but it's much more effort, a lot of work, and a lot of fighting with yourself. Okay, that's the big difference. So I don't want to go into all details of psychology, but I think you get the point just by listening to those few sentences here. Now, how do we choose directions? What does it mean? We want a pair, a forex pair that is trending and that is moving, volatility. Okay, we want it to be really looking good on a chart. How? Higher time frames. Look and see if price is really giving us new candles, or if it's stuck like it did here. Okay, first of all, we don't need to do it like this. We start with a weekly chart. Okay, on the weekly chart you will see immediately if a pair is trending or ranging. Let me get rid of some EMAs to just show you price action right now. Okay, we just leave the trend following EMA, the 36. So you tell me, is this pair ranging or is it trending right now? Just by looking at the previous 2 candles, which is 2 weeks, and the whole chart here, the last whatever, how many candles are those here, like 100 candles or something. It's trending, right? Everybody agrees. It doesn't matter if you're new, if you are trading for many years. It's so easy to spot a trending pair. Okay? On the weekly chart, we can also see in between when a trend is stopping. Let's say we would watch this at that point. If I would have asked you in April, that day here, somewhere here, if this pair is trending, what would you reply at that point here? Ranging, right? On the weekly chart, it may be trending on the 5-minute, but on the weekly chart, it's ranging. Okay? And it's very important that we figure out the direction of a pair when we want to trade it. Okay? Yeah, it's a range in a trend, that's for sure. But at that point, it would be a range. Now we know that the price broke the 36 EMA, and it's over the 36. So what, do we have an uptrend? Do we have a downtrend? What's going on? Quick, everybody, I think it's so obvious. It's an uptrend. Okay, as simple as that. We can also draw lines. I love drawing lines. Two kinds of lines we draw: horizontal support and resistance lines and trend lines. Okay, now a trend line in a downtrend, I just want to draw resistance, no support, only resistance. So as that was going down here. So if I connect movements, like price is always moving what? Never in one direction. It's always breathing in, breathing out, breathing in, breathing out, breathing in, breathing out. Okay? A living thing, don't forget, always remember, you're trading not a chart, you're trading with and against millions of people that try to make money. Okay? This thing is alive. It's not a chart, it just looks like a chart. Okay? So how do we connect those retracements in the downtrend? We just use the pullbacks and connect those. 1, 2. We need at least 3 lines ideally to define a trend line. So we have 3 touches, we extend those, we have 4, we can extend them, we have 5. Now you see down here, if I draw it like this, at that point price did not get back to it, it stopped at the 36. So what happened? The angle of this line is changing after here. Okay, so the line looks like that, and afterwards, after that happened, a combination of the 36, which is our trend following MA, and a trend line that I can draw, it would look like that. Yeah, more or less touches. 1, 2, this touched the 36, so 3. The angle of the trend line changed. The 36 is also a trend line for us if we don't find enough touches. So in this case we found the touches, then we had the 36, and here we have a combination of retracements and touches on the 36 and the trend line. Makes sense so far? 36 helping us to draw trend lines, to keep it simple. And again, it's a lot for many people, but if you watch this video afterwards a couple of times, it will sink in slowly. Okay? Now, what we do, I get to this right now. We don't draw lines exactly at the highest points of the tails and wicks. We don't do it like that. We try to draw them between the bodies and the tail. So here the body ends, here is the tail. So in the middle, between the body and the end of the tail, that's where how we draw a line. That's how I like to draw a line. Okay? It gives me better information because again, it's a living thing. It will not always stop exactly at that point where you want, but it will get close, or it will break the line and then spike on it. Okay, this is good information. Same with the 36. Sometimes it will stop at it, it will break it a little bit, it will go down, it will almost touch it, or it will break it and then go down. So in a downtrend, what you always will see is lower highs like here. Okay, and in a really powerful trend you will see lower lows, like this is a high, this is a low, this low is lower than the previous ones, so you have a lower low. It goes back all the way to that line, then you have a high, but this high is lower than that, so you have a high, a lower low, a lower high. Yeah, and that is what we call an ABC, or 1, 2, 3. And that is what markets always do. Doesn't matter what you look at, it doesn't matter if you go back 1,000 years in history on a chart, you will always see 1, 2, 3, sometimes smaller ones, sometimes bigger ones. And you need to be able to figure out the good ones, to filter out the good ones and the bad ones. Okay? Now, do we understand a short 1, 2, 3, everybody, in a downtrend? Look, here's a high. Now we get another low. It's not exactly lower than that. It's kind of a double bottom. But what you get here or here, it's both more or less the same. You get a lower high. Okay? Then you get another low. And you get a lower high. And we call those things 1, 2, 3s. 1, 2, 3s. In a downtrend, we get short 1, 2, 3s, ideally retracements back to the 36. In an uptrend, we get long 1, 2, 3s, meaning price is breaking the 36, creates a new high. It either retraces to somewhere, or it retraces to the 36 like it did here. Okay? Afterwards. or sometimes a little bit less or more. But the 1 to 3, the historical 1 to 3 that happened here is visible. You can see the break of the powerful weekly trend line. You can see the price moving up. You see it coming down. It was ranging here, coming down to the 36 again, then breaking out and creating higher points. So just by seeing 1, 2, 3s that are still active and going, like those ones and this one, means usually that you have a trending pair, especially on those higher time frames. And to choose the pair, what we want is to find that trend. Okay? Yes, and we need the historical chart, David, to find a trending pair. Okay? We need to understand and see that. Okay? If we don't see it, we don't figure out if we have a trend or not. So it's a good thing. It's not a bad thing for now. So are we okay so far with the weekly chart, a trend line down, a combination of the 36 and a trend line, and a lower low and a lower high in a downtrend? Are we good with that? More or less, like 70% would be fine for now. Some more answers would be great, just for me to make sure. We get into that. We get into the strategy and how we do it. I just want to go over the basics, okay? Great. So, price is up. What about an uptrend line now? Like on a downtrend, we said we draw a resistance line. On an uptrend, I only draw a support line. No channel, just a support line. So from here, sliding it across price, I have a touch on a 36. And if I extend that between the body and the tail, it would look like that. So I don't have 3 touches yet. I have only 1. All those little touches count as 1 because price did not move far away from that. It came back to the 36. It bounced. It moved higher. So if I extend it, that is my possible support line now. What does that mean? It means like if price decides on that time frame to move up much higher, and then decides to move down, when it's then reaching the extension of what I've done here plus the 36, what is likely to happen if that wants to continue trending? What is likely to happen when price is coming back down to the extension of this plus the 36? Any ideas? Especially the new guys? It's likely to bounce, and it's very, very likely to bounce. And I tell you that because really the higher time frames, exactly, or it breaks, but it will probably first bounce, especially on the lower time frames. Okay. Now you never know 100%, but nobody knows that. That's still the sexy part in trading. There's so many parts where we don't know, but we try to get bigger chances, and that's the interesting part, and that's where you still get the chills when you trade, right? Would be very boring if we already knew everything. Exactly, like a ball that's bouncing, Stefan. Yeah, there we go. Now, I'm telling you out of experience, out of what I've seen, and out of my trading results for many, many years, that a weekly support and resistance line like that, especially in combination with the 36, is one of the most powerful lines you can ever draw. So this sentence alone is very, very, very important and helpful to you, really. I'm not kidding. Weekly support and resistance lines drawing like that, okay, are so powerful. You want to remember this, especially in combination with a daily chart. Okay, just keep it in mind for now. We are going to need those lines a lot. Okay. Now looking at that, we know, great, trend line breaks, 1, 2, 3, maybe another one at some point. We don't know yet how far this will go, but we assume just by looking back on history. The historical chart gives us a lot of information. We check and see how we have on average a move of 1,500 points, 1,500 points, 1,700 points. This one was bigger, 2,000 points. So we know that between 1,500 and 2,000 points, we usually lately get retracements on monthly charts. So these are things to remember, okay? More or less. We have other filters, but it's good to see. Okay, so we have a trend change. Price is going up. It's retracing back down. We have white candles, and the last two white candles here, looking at those candles, down here was the open of, let me just zoom in a little bit. It makes it easier for everybody. You can see the open price of the candle by having the bar chart in the background, right? The open of this week, the close of the week, the open of this, and now in between it's here. So since last week it moved up 500 points. That means to me, plus the big chart here, that of course this is a trending pair. I don't even have to go into the lower time frame to figure it out, but it will show me already here. Now if I wanted to trade this product, this is not Forex, it's gold, it doesn't matter, it would be a good choice. Yeah, just on the weekly chart. Do we agree on this one or not? Yeah. Now, okay, you're also in gold. Okay, well done. Now if we look at the daily chart now, the next step is from the weekly to switch to the daily. It's all set here in MT4. You just have to go to the next time frame. Just to make sure that it's really trending, we'll check also the daily chart. On the daily chart, you see those big weekly 1, 2, 3s that I have here. But we also see something else. We see the candles, we see the movements and smaller ranges that happened. And we see at what is happening right now, the previous days. Okay. So what happens? We have a line here. How can we have a line coming from the weekly chart, just to make sure. If I'm too fast, you let me know, right? 1, 2 touches, extension. Look at the extension of that. Even on the daily chart, you have 1, 2, 3. I extend it up to here. What happened after price coming down 1,000 pips almost, in combination with the horizontal line, where we also find multiple touches in one area, 1, 2, 3, 4. If I scroll back, probably more here. Okay, but you don't have to. Here, here, and here. What happens? Extension from down here in combination with the horizontal line. What did price do immediately? What did it do here? Everybody, I want you to see the importance of those lines, please. It bounced, okay? If you check a 1 hourly chart, a 50-minute chart, or 5-minute chart, you would never ever guess that there is something here that would make price probably change direction, or at least bounce for a while. Okay? And that is when people go into trades because they see the volatility, they see the direction, they see a 1 hourly chart, maybe there's a setup according to their systems. They take the trade and suddenly it goes against them and they're like, oh, everybody's watching me, and if every time I go short it goes against me, because nobody is looking at the higher time frames and the information you get from there. And I'm not kidding, it's really like this. Okay, it's like that. And the higher time frames are used by the big guys. I'll tell you again, weekly, daily, and monthly charts. So you have to do the same thing to find the powerful areas of support and resistance, even if you trade on a 5-minute or 50-minute chart. Okay? Now, what else do we see? Let's draw another support line. What else can we connect? We had a range here. If I draw another horizontal line in this area, look, all those touches here, Okay, even the spikes here, but most of them are between here and here. So we don't draw 10 horizontal lines. We just leave one line at the point where we have the most touches. So here we have a lot of touches, here we have them, and here we have them. So instead of drawing one here and here and here, we just leave them somewhere in the middle. Okay? Between here, here, and here. Now you have another horizontal line of resistance and support. Because price is above it, this would act as support. Okay? If it goes down. That's all you need, plus another trend line. So when price is going up, do we draw resistance lines or support lines? I said it before. If price is going up, not going down, if it's going up, we need support lines, right? Horizontal resistance and support, yes, but I'm talking about the trend lines. So I get rid of those for now, so make it easier on the eye. A trend line connecting our retracements, right? We need support because it's going up. Can we connect 3 touches? 1, 2. The extension of 2 was here, and now it looks like that. So what happened on the gold chart when price retraced to the 36? It was stuck there for a couple of days, only to bounce off it. And now this area was also an area of horizontal support between here and down here, remember? Yeah, so again, what we have is a combination of multiple touches plus a trend line in one area coming from a high time frame, daily chart, no 5 minute. Okay? And what happens? Price moves down, it reacts and moves back up. Good? So far? Okay, so don't overanalyze it and look in every peak. Just look at the whole area of support and resistance. Don't try to be like a math guy or a physician to find out that tiny little thing that you have to figure out with your calculator. Okay, markets don't work like that. Yeah, remember, it has to do with a lot of people, everybody fighting greed and fear to make money here. And because nobody's using the higher time frames, only the big guys or the guys that look at the higher time frames are really making the big money, while everybody else is most likely to end up best break even. Okay, because not of patience and discipline, because there's no system or there's no plan and they don't have a clue how to approach a trade. And like everything else, trading is your personal business that you have to learn. Yeah, it's not difficult, but you have still to understand what makes sense and what works and what doesn't. And if you think about it, there are no many systems. The system is understanding what price is doing, find the direction, and get some rules to get in and get out in combination with money management. That's how it works. Everything else is just a lot of show. Okay? I have a question here. Before I continue, let's focus on the questions. Nick, we have a question here. Just 1 second, guys. Okay, guys, sorry, I'm back. So let me reply to the questions you have here. Don't write at the same time, everybody. Let me just answer one first. Let me read. The trend line, you never know that till it happens. Price go up. Mike, you mean if it will bounce? Yeah, you never know it. But you know what? The thing is, you have a great chance that a bounce will happen. So when we have a bounce on the higher time frame, we can still get in and do lower time frames even if it's not falling through, it will still go a couple of pips or 100 or 200 pips before it does something else. Okay, so if it doesn't stop and it will break, it's also good information, because if a trend line on a daily and weekly line chart breaks, then we look for setups to go short. But we need the lines, okay, to figure out what happens in those areas. Those areas where we have our 2, 3 and more touches and connections in combination with the 36 or horizontal support and resistance, that areas we call profit zones, because in those areas we are looking for setups. Okay? Okay, guys? About that, what else do we have? We get into the top down. I'm just starting, so don't ask please questions that we are not there yet. I'm just going over everything step by step. Did I forget anything? What's the question? How do you define to draw a trend line on head to candle low of a candle? I don't understand the question really. What do you mean? The only thing we need is higher highs and higher lows in an uptrend, and what you want to see is the pullback, the retracement, right? And the first touch, this is a low, the new high and the higher low. When price bounces on it and it moves up, then you have the second touch. Before that you don't know. Okay? Then you extend it and it's ending up close to the 36, it's good. Sometimes it will maybe spike, break, and then spike and go up. Sometimes it's not touching exactly, will stop before. But when it's getting close to it, you always have, most of the times on the 36, you have a 50% retracement, which is a good retracement anyway. Okay? And you extend, oops, what did I do? And you extend that line, and, come on, this 74 thing. And then what you do, you have a future line that you can use on this time frame. There will be other lines that we draw on the lower time frames, but those lines on the higher time frames, they stay. On the lower time frames, on the 1 hour and 4 hour, we get a lot of lines. But when price comes back and we do our top-down approach, starting from the higher time frames to the lower, we will see that line. And we know that when price is coming to that line, even if it's going down really fast, its most likely first reaction is that it will bounce. So we know when it's going down that we have to be careful at that area. That's why it's so important that you have to do the top-down approach first to figure out the direction. Secondly, to draw horizontal support and resistance line plus trend lines. So far, we don't go further. Just leave it here so it can continue. It's too much if you try to overanalyze it right now. Okay, everybody. Yes, you need at least 3 would be better and more. But when a trend is starting out, like here, you only have 2. Come on. And then you would just extend it, if possible, close to the 36. Then you have a bigger chance. You see things clear and you know, okay, now I have a combination of a 36 and a trend line and horizontal support. Maybe something will happen. And if it happens, I'm the first guy who will take action. Okay? Okay. Now I'm just going over the basic top-down approach right now, drawing lines correctly. Okay, so we're not yet into the entry rules. We get into it very, very soon. Let me just choose pairs right now. Okay, can I continue? Okay. We've done the weekly chart. We have a confirmation on the daily chart. We have drawn lines on the daily chart. We know what's going on. We know it's trending. What about resistance now? Price is here. It's up whole week. The next area of resistance is of course the previous high, which is here. But for me it's not enough, because in an uptrend price usually creates higher highs, higher lows. So the previous high doesn't mean anything, because I expect price to move higher anyway and do that. Okay? It only means something if I can combine it with something else. So again, what we do, we zoom out a little bit, try to find something on this chart. So it could be difficult to find it in a trend on the daily, so you really have to go back sometimes back to the weekly and find something there. And if I look at it, let me get rid of the lines. Here we go. If there's too much background noise, you let me know, because it's loud here. Where's my next area of resistance? Is there anything pointing out that I could use for resistance except of this high? Do you see anything on this chart? You don't have to go back 10 years. Just on this chart, is there something that will help me draw a horizontal area of resistance? Yeah, we have this high, which is very close to this one. Yeah, a combination of both. Is a little bit higher actually. And we have this high as well. Okay, so instead of putting it here or here, where do we leave it? We leave it not here and not here, but somewhere in the middle. Okay? For me, that's enough. Spikes here, bodies here. Then I know that this whole area is resistance. Okay? So far? If I then check my charts, and I say, okay, I know there's a high here. We took some trades here. There's still a position running on that one here. Okay. But this high in an uptrend doesn't mean too much, because I'm expecting hopefully a higher high. And then up here, I'll start watching closely. But right now it's still trending, so even from here to here, it's 300 pips or more. And this is trending, so I'm not scared. We're never scared of an area of resistance or support. We just don't ignore it. Yeah? We look at it, we pay attention to it, but we're not scared. Yeah, because if you start getting scared of support and resistance areas, you will be scared all day long, because they are everywhere. You find support and resistance everywhere. If you look hard enough, you will find, even here right now, an area of resistance. Something will be there that can bother you from trading. That's why we look at the big picture and look at volatility in the higher time frames to make sure that charts look good, and we only pay attention to the really big areas of support and resistance. Okay, now right now we only did the weekly chart and we did the daily chart, and that is the only thing we need to find a pair that is trending, to make a decision which one you want to use. Okay, I have gold here, for instance. Now I'm going quicker because I don't have to say everything again, and we check one pair after another and see which are volatile and which are not. I have already a few on my watch list to compare. The next one is the Australian dollar weekly chart. So if I look at this chart on the weekly, is that one trending or is it ranging? Trending, trending, ranging, trending, trending. Really, guys? Don't think about the lower time frames because we know what happens on the lower time frames. I want to know on this weekly chart what you see. On this weekly chart, don't look at the 1 hourly chart because I know some of you are trading this pair, so you already know how the lower time frames look. I want to know what it's doing here. Exactly, right? This is ranging because I just see 1, 2, 3, 4, 5 candles, 5 weeks, it's still in the same area. I don't see candles going down or going up. I don't see candles closing higher on the weekly chart. It doesn't always mean that it's ranging, but it was ranging on the weekly chart. And this is good information because what we draw, as I said, is horizontal lines on the weekly or daily and daily, and trend lines. So I have the lines already ready here. Here I have touches on the weekly there, here, here, and here. And resistance, I have those highs in combination. Look, I have also spikes up here, but most touches are down here, between here and here. So this whole area, even down here, if you go lower to here, you have a lot of touches, and it's there at that point right now. Yeah, that whole area between here and here is still resistance. But we don't draw median lines again. We draw one and leave it somewhere in the middle. And sometimes one time frame doesn't give us good lines, so you might have to check a daily chart to find more details. But what we can draw is a support line. We have a high and a higher low, and we can extend this to here. This would be only 2 touches, and that would mean price have to actually go create a higher high, and when it wants to come back at some point, it has to do something like that. Correct? So far? But just by looking at it, we see those candles. And those candles are pretty kind of flat. Okay, what else can we draw? We know a downtrend looks like that. The trend line is the 36 EMA, or combination between the 36 and something that we could draw. Yeah, angle is changing. 1, 2, 3 touches, range, range, range. And then a break of the 36, price goes up, but then it breaks the 36 down again. But then it bounced and it moved up again. So looking at that big thing here, we have a higher high, we have a higher low. Price stays right now over the 36, so it is a range in a possible uptrend because price is over the 36. Is that clear so far? Okay. Okay. What else can we do? We can draw a trend line, maybe, because I don't see any higher points. This already happened, so we know there's a break and the trend has maybe changed. But I could also connect this line to here 3 and then extend it. What happens then? Yeah, price over the 36, so it must be long. But we still have resistance. We also have those touches and the horizontal line in this area. So a combination of both could mean that price might stuck. And it is already, it did already stuck here. That's why this is not going higher, because it found this extension and this, and we have it moving like that for about a month or longer already. At some point it has to break either up or maybe bounce and go down. So it has to go somewhere, and we don't ignore a wedge like that. Yeah, we don't ignore. When we see prices ranging and we see candles are not moving higher or lower, we always take another extra look and find out what else is going on. So we know the lines, we know this, we know that. Price is stuck here for a reason already. What's the next thing we have to do? We know already what the weekly does. What's the next step now? Yeah, it might go up or down. It's always like that. It might goes up or down. It's always like that. Yeah. We go to the daily chart. Okay. And on the daily chart, if you look at it, you can see that it's kind of a uptrend, but not too volatile. It's always finding this resistance. You can draw a trend line. Yes, you have your 3 touches here. Yeah. But we also have this, and we don't ignore the combination of this whole thing here and this. And what we did, we took longs already on the lower time frames, but what we know, we have seen a 1 2 3 1 2 3 1 2 3, another 1 2 3. Okay, what we know is that yes, it's moving up, but there's always this but. It doesn't mean that we don't trade, we just risk less. We start taking profits and we just keep a position running. That's the general idea. But now looking at the daily chart, what would you think? Is it now trending? Is it ranging? Or is it trending in a range getting close to resistance? What is going on here? The first one, the last one? Remember, we want to choose a pair to trade on. Yeah? We don't want to choose a pair that we have to wait on. We want to trade on. Trending up in a range, exactly. So, if you have to choose right now between this chart, gold, and this chart, which one would you choose? Exactly. So we all agree on that one, right? Because of all those reasons. Okay. Now we go to the next pair, which is GBP US dollar. Now because of the Brexit, we had a nice killing break of 2,000 pips, but now it's relaxing and price is trying to retrace GBP US dollar. If I check at the weekly chart, I don't have to ask, it's a trend. But because of the Brexit, and sometimes those news are fake, and I'm really meaning fake, whatever they decide to do, the chart already knew the direction. It was already short, right? So spiking, taking everybody's stop out, and then going down. Okay? But what does the market, what does markets do? I said it before, they're never just moving in one straight line down forever. They always have to, when they breathe in, they always have to breathe out. Always. Now, what that is telling me on the weekly chart, it's a tiny white candle. If that is closing white on Friday, what could we expect? Yeah, we could expect a bigger retracement or bigger pullback to the 12 or maybe to the 36. We don't know yet. So this pair, everything connected to GBP, especially GBP US dollar, is a tricky one right now. It looks very volatile and fast, but that was caused because of the Brexit, and that's why we have to be careful. And if I look at the last previous daily charts, what do you figure out? Weekly short or not? What is that? It's still ranging, yeah. So it might retest the 36, continue ranging, or break it, create a higher low, and then retrace more. But right now, if I look at it, it's difficult to say what to do. The only line I can draw, if I was to look for basic spot on 1 to 3, is that, and hoping that it start ranging at the 36 and then give me a big breakdown so I can find entries to short that. Okay, but when you look at the weekly, it might not do that and retrace more. So yes, we have a downtrend, but now we have a range where if I look at this, I'm still in the favor of the gold chart. Okay, because we don't know how fast it will, or how far it will go. Yeah, so we don't have a clean thing going on today. Maybe in 2-3 days it looks different if it goes down. Right now, I'll see a retracement. It's close to the 36, so it could stop here. It could start ranging here. Again, compared to the other pairs, I'm still in favor of the gold because this looks just clean. Do you agree with that? We don't have to be experts to see this. Yeah, it's obvious. You don't have to use Fibonacci retracements, because if you get a retracement to the 36, a smooth one, not a breakout like that, you usually have 50% plus, between 50 and 60%. Okay? Fibonacci. You see, from here to here, it's 650 pips. The retracement is 400, so you get your 60% retracement. Okay. Are we okay with this one? New Zealand dollar, Canadian dollar, weekly chart. Look at that one. Is that ranging? Is it trending? What do we see on this time frame? I chose those pairs for a reason, right? To see the difference in behavior. This is a big range, correct? But the last 2 weeks it's going up. It's going up. But what is bothering us on the way up? Soon. Exactly, right? We have the resistance there. What about a support area with a lot of touches? We can go like that. This touch and these and these. Ignore those. This and this. They all count. Latest one as well with those combinations. So now I have a very big range on the weekly chart, right? But the last 2 weeks or 3 weeks, it's going up 300-400 pips. So it's still moving. It's not dead. Okay? If I go to my daily chart, look at that. Trend lines, 36 EMA, guiding it, 1 2 3 1 2 3 1 2 3 1 2 3 1 2 3 1 2 3, and then it's going up. Okay, 1 2 3s, sometimes to the 36, but then only to the 12, a big one to the 36, bouncing back up. So we have a powerful line. We have horizontal support. What happened on horizontal support on the weekly? It started to range. Then it broke. Let me get rid of the big EMAs. We don't need them right now to make it easier for you. Then price decided to break a daily trend line, bouncing on a daily and a weekly horizontal line, giving us a higher high, retracing back to the 36, and then boom, bouncing like crazy. So after a weekly trend line and daily trend line break, which I said is most powerful, in combination with horizontal support, we get a good reaction and a new direction. Make sense? Okay. The only thing I can connect after that move up and the break of the 12 now is this and this. I have like two touches. This one is too far away. We cannot do it. I just do it like this. That's the only thing I have. What I've closed, yes, is horizontal resistance between here and here, this whole area. It's still going up. So now looking at this, we know on the monthly and the weekly is a range. On the daily, it's still a trend. So is it volatile or not? Yes, it is volatile. Yeah, we don't ignore that because it will be very powerful probably, but we see also this thing going up. As long as this is going up, we can choose this one as well as we can like put it into the category of, you know, volatile and moving right now. Yes. So there's another good one. We take it and put it next to gold. Everything that we like, we place on the left side, or I do it at least right now, and the rest we leave here. The next one is the USD yen. I will do it faster now. Let me just get rid of all the other previous things we have here. I also get rid of the big EMAs. We don't need them today. So is that trending or what? USD yen, or is it ranging? Yes, trending, exactly. Yeah, and that is exactly what you need to see. Okay, this is exactly how a chart should look like that you want to trade. It must be something that is going either up and down or down. Ideally, for this exercise, you want to choose something that is moving. You really must start liking or loving trending pairs or products. Okay, and this is going down, up, down. What is the price always doing? Even in range, it creates 1 2 3s. It's always breathing, always breathing. Okay, now this is breaking here. The 36 is your trend line. You see what happened after the 36 EMA breaks. You get your 1 2 3s. Price is going down on the weekly chart. We have volatile two candles. We have opening highs and closing lower. 500 pips move. So it is for sure short. Now on the daily chart, we can see the power of it. And last week in the live room, we were just discussing this a lot. Yeah, the sliding and the bounce of this pair. Doesn't matter how you draw the lines. You can draw it like that, or you can use it from up here. The extension is always ending up either here or here in this area. So what price did? It spiked, it bounced, and I guess who of the guys that took the short is still in the short? Anybody in that room tonight? I mean, I told most of the people that are already members to watch the recording, so we have a lot of space for everybody else. But maybe some are sneaking in here. Yeah. So this pair is volatile. Yeah, it gives you 1 2 3s. Sometimes you see it's breaking the 36 only to end up at the extension of a powerful line, and then in the end still moving down. Okay, so it's very, very volatile and still going down. I don't need to go to any other time frame to say that this is short and going down. Okay, now do we like this pair or not? Yes, we take it, put it to the left. We even like it better than the previous one, so it goes next to gold. I go to the next one, GBP JPY. Pairs connected to GBP because of Brexit all look a little bit funny. Here we already had a 1 2 3, and after price ranging close to the 36, it started moving. So this looks better than GBP US dollar. It is volatile. The month, the weekly is also very powerful. So to make it quick, it's still a trending pair. Okay? Still trending. Just give me a second. Okay, guys. So, sorry. Short. This pair I traded between 2007 and 9 only. If you look at the monthly chart going back those years, you see what happened here. Like we're talking about 13,000 pips down. Okay. And no sound. Can that be? You should be able to hear me. Can you hear me, guys? Okay. I just said that we had a 13,000 pips move between 2007 and 9 down. Okay, before it started to slow down. Okay, so for sure a trending pair. Now we have GBP New Zealand dollar, also trending. Weekly, I chose the GBP pairs because they are trending better than cable, also going down, so we can also use it. EuroCAD, it's one of those examples. We have a wedge. It came out of there and it starts moving now on the weekly. So on the daily, it is volatile, but it is hitting a lot of horizontal resistance between here and here, so we don't ignore that. It's a different example. Okay? It's still volatile, but it is different because of potential resistance. This whole area is resistance. And then one bad example, for now at least, it's the Euro US dollar, which has a big range. Okay, and it has a downtrend and an uptrend, and now it's trying to go back up again. So on a daily chart, it started to move, but it looks like this now. Okay, so we don't know. Will it bounce? Will it go back up? Will it reach this? This is one of those examples where we say it's volatile, but others look much better because this is still not confirmed. Will it go up, or will it maybe decide tomorrow and start going back down again? But if it stays up, the goals or the targets are still far away, so you could add charts like that as well. But your favorite ones should look like this. Make sense? So what we do right now is we take a 15-minute break for everybody to digest before we get into the strategies. And you decide during the 20 days which of all those pairs I have here you would trade. And I'll ask you later on and you tell me. Okay? So right now we're taking a 15-minute break exactly. Okay, guys? Just to you know, be able to think. 15 minutes, not 5. Please, 15 minutes. Okay, let's make it 10, but 5 is not enough. Okay, we have a lot of things to do. Okay. Let's try 15 minutes, okay? Okay, see you soon. So, what did you come up with? What was your decision? Everybody, please typing that pair that you think would be something to trade on this week so far. Gold, USD yen, gold, USD yen, GBP, JPY, USD yen, gold. Okay, USD CAD. I'm talking about the pairs that we have, that we did cover here, not the ones that you're already watching. I'm just trying to see how many people would like choose the same one. Okay, so we are all on the same page, right? Like first two favorites here, and then maybe GBP, JPY, or something else. That's fine. Yeah, good. That's great. So what the way I see it, we have gold and we have USD yen, and because we said forex pair, let's then look into the USD yen. Okay. So we can choose actually between USD yen, and I think the second one was also GBP JPY. So choose between those two that we can work on. Yeah, don't think about what it will do. Just look at it right now. If it changes, you might choose a different pair next week. But doing this exercise right now would be smart if you would choose one pair and try to focus on one pair for a whole week without looking at anything else. That's the trick. Okay. Yeah, so we have GBP, JPY, and USD, and okay, we do both. We do both, and then you can choose. Okay. USDN daily. What we now want is to look for setups. Okay, you did your research. You figured out that you want to trade, let's say, USDN because it's volatile and it's trending. And now you want to trade actually and make profits long term from this pair. I'm talking about long term because we think about the whole week, or maybe 2 or a whole month, or as long as it looks good to trade. Okay. First thing we always do weekly, done already. On the weekly, we draw horizontal support and resistance lines and trend lines. Okay, so we start with USDN and go to GBJPY later. So looking at my lows, where's my powerful area of support on this pair right now? Price is here. I look back on the chart, I find support here, combination with previous resistance, powerful area. Price already spiked on it, tested it already, went up another 1,000 pips, and now goes back down. So if it's not retesting the same area again, okay, where is my next area of support? It would be where? More touches. I'll see a lot of touches down here. Look, you also have like a trend here, but looking at this and this and this high here and those two lows, ignoring this one, this, and this is in a good area of support, right? And after that, maybe down here, and after that we don't care, because right now we always care about the next area. We already have one that's more than we need. If that breaks, we know the previous lows will be the next. Okay so far? Yes? Okay. What about horizontal resistance? That was the one price reacted here already, this low, this high, it spiked, came back down. So the next one after that one would be somewhere here. Touches there, touches here, 36 also following, great. If I draw now a trend line, at that point the line looked like this, but that would be far away, so I need a different angle closer to the 36. One touch between the bodies and the tails right now would look like that. I don't have anything else. So this is actually the 36, and we don't need it therefore anymore. The only thing we need is this one. Everybody agrees? So it's done. The weekly chart stays. You don't change the lines until price really starts bouncing and breaking on it, breaking them. As long as they are working, you just leave them. You don't have to do that analysis again. Okay? On the daily chart, you do it like that. USD yen. You have the lines. You can now look into detail. Say, hey, look, here I see Drawing it a little bit higher will give me all the touches. So yeah, okay, then leave it there. Down here, I have already all the touches. Great. What about trend lines now? The weekly one is far away. Maybe I can connect something here that makes sense. Before it would be something like that, but now that it's already down, we can find more touches. In between it looked also, now the line is that. In between it also looked like this. We had this before, and we had that, and we had this. This is not, we don't need it anymore because we have a new one now with 3 touches and the extension of those two ending up like that. Okay, we have everything in place. We have the direction which is down. We have horizontal support where price was already. Once it is getting to, or is right now already, the next area of support, and we have resistance. Is there anything else we need, or are we good to go? Weekly and daily. What do you think? Is there something else, or can we just start looking for trades? Exactly. Good to go. So how do we trade this? Remember, you have one pair you want to trade. You just have to assume that nothing else exists. It's the only pair that you can trade off because there is nothing else for you. Okay? Now, depending on what time you have or what times you have to trade, you have to create a simple plan. I give it to you like in a nutshell. Let's say this week you're working somewhere and you're working in the evening. That would mean that if you're in Europe, you would be able to look at the London Open. It's just an example. And you have time to trade between 8 a.m. and 12 p.m. 4 hours. Okay? So you have to create a simple trading plan telling you to trade this pair between 8 and 12. Okay? Now what can you do between 8 and 12? Of course you could do scalping, but we are not going to do it. It's too much detail and too much effort right now. We don't need that right now. Okay? But you could easily do day trading, and you could easily do swing trading. Because swing trading, higher time frames, daily charts, weekly charts, even 4-hourly charts don't give you that many setups. Maybe you're missing out a few of them, but it's doable. You could find setups, even swing trading, in combination with day trading because you have only 4 hours. When you come back from work, a daily candle will close. That means, according to our system, we also have daily candle charts, right? Swing trading on daily charts, which means you can easily combine day trading and higher time frame swing trading, even if you work all day long. Okay? And if you have only some hours in the morning. Now, if somebody works in the morning but is home in the evening, you could combine US Open, for instance, day trading, plus using daily charts for swing trading. Combine both. So you have to create a simple plan that tells you, I'll trade this week, this pair, looking from 8 to 12, looking for day trading setups and looking for swing trading setups as well. Make sense so far? Okay. Now with me it was different. I had a lot of time. I had to work, but I had to work starting, let me remember, was it 3 or 4 p.m. So what I did, I traded the London Open, and I even looked in between on 1-hourly charts and 4-hourly charts, even after 12, 1 and 2 and 3 o'clock for setups. I explain how we do that later on. Okay? And then I would just, when I came back, after coming back from work, I would just at night look for daily candle to look for daily 1 to 3 setups. Okay, that way I could easily trade. London Open was just part of it, and if I got into some good trades already in the morning, I didn't have to do anything else, just leave a position running and go away. Okay, trailing the stop, taking some incremental profits and do something else. So sometimes you will get setups during those hours that you're watching, and sometimes you won't get anything. And then you cannot trade. You just have to wait for a good setup. This is how you create a basic plan. And you can adjust and change the plan every week. You can say, okay, next week I will look if that pair is still volatile. It gave me good setup so far. I continue trade this. If next week you see the pair is not good anymore, you can choose on Monday or Tuesday morning a different pair that you will watch for the whole week. Up to you. Okay? I would prefer you choose one and get really good at one for more than just a week, but for a month. Even if it's ranging, you'll figure out how to catch the setups in a range. Okay? So that about the plan. The money management part, before we even get into the technical part of setups. When you trade your full account, it's micro lot or even on a demo account or mini lot, whatever you trade, okay? Don't expose the account to more than 2% on a swing trade and 1% or less on a day trade. Okay, so if you have an entry with a setup with a 50 pip stop, and that 50 pip stop would be, I don't know, 0.5% of your account or 1%, then that's it. Okay, you wait until you make the profits or you get stopped out, and then you go for the next trade. You don't find a setup and risk half of the account. That's not how we trade. That's not how we trade. Okay, that's just getting lucky or not. Remember, don't expose the account to too much. You have to earn the right to make more. So risk 1%, swing trade maybe 2% on the higher time frames, and then you start really trying to grow the account on this one pair first before you do anything else. Okay, I get into that at the end again. Okay, it doesn't matter how many sessions you trade. It doesn't even matter if you sit there all day long. When you open a setup, when you open a trade and there's a setup, you never expose the account to more than ideally 1% on a day trade and max 2%. I wouldn't even go for 2% if you don't have any experience. 2% is for the guys that already know how it works. Okay? So I would go for less if you are new, like 0.5% up to 1 for a swing trade. So it doesn't matter. You actually have to lose like 200 times to kill the account. Okay? Which is impossible really if you start understanding how it works. Okay. Great. Now we have that. We have the lines in place. Horizontal lines, trend lines. Price is down, close at support. It's already testing this area. So when I zoom in now to check my charts, what I see is volatility. I don't ignore the fact that I have a lot of support between here and here. Okay, but I'm not afraid of it. My next area is down here. I still have volatility, and in a downtrend, price will create a lower low anyway. Correct? So you're not afraid of a double bottom or something like that. Okay? So how do we look for trades? In order to understand the setups, what you need to do first, or what I would like you to do first, is doing only basic Spartan 1, 2, 3 setups to get into it. Okay? No bounce trading, no breakouts, just 1, 2, 3s. Okay? Are we okay so far, guys? Hey guys, please don't ask me questions about the weather or something when we are talking about trading and the setup, about the setups right now, okay? Ask me this stuff later on because it's kind of, you know, I'm losing my train of thoughts. Okay, so in order to figure out how to trade here and what to do next, we have to go back and do a little bit of historical setups to understand the system. Okay? To understand the system, so you have something to practice. I want you to practice after this session for a couple of weeks so you get the feeling of it. Okay? Now, we had already a big daily 1, 2, 3. Price going down, price retracing back, ending up at the powerful resistance line, sliding on it, moving lower. So the filter was the weekly for the volatility. The daily gives us the direction at the setups, okay? But we already got 1, 2, 3s, 1, 2, 3s on the daily chart, and that was up here. Now price is down here. We worry about that later in about 15 minutes. Right now, let's assume you are here and you want to get into a trade. Okay? So how would you do that? You know price is likely to bounce or to break this. You know it's a downtrend. You know you had already 1, 2, 3. 1, 2, 3. Okay? And now price is stuck here. The next thing you know is price breaks the 36 EMA. It also breaks that line that we draw between point 2 and point 3. This is point 2, this is the highest point of 3. But what we do on those high Kinashi candles, we draw the line sliding it like below the bodies of the candles, or if there are spikes between the spikes, so it looks like that. Yeah, so we see if that line breaks and the 36 EMA breaks, it's visible. And if it looks like that, it's still ranging. You can later on do it like this and then like that. But you will see the clean break candle. Price will break that line. It will close lower. Okay, and it will change the color from white to red, or from green or blue, whatever you have for longs, to red. Okay? So you already have a 1, 2, 3. Price is sitting at resistance. Even if you didn't have a 1, 2, 3, price is still at resistance. And then you see the break of the 36, in this case also the break of your 2 to 3 line. And after that break, only after it happens, you are interested in a trade, because you will get signals only after the confirmation. Before that would be very aggressive, and we are not there yet. Yeah, so we want to be more conservative before we get aggressive. Okay, so far? Can I continue? Okay. Now, we'll do a lot of those examples, so don't worry. When I get this break and the candle is closing, in this case on a daily chart, most of the times in a powerful trend, it's a confirmation of a continuation of the trend. It's not always working like that. Sometimes the next day decides something else. But in a powerful trend, most of the times when it's rejected, when it got rejected by resistance, yeah, it will follow through for a while at least. Maybe it doesn't go forever. Maybe it stops at a double bottom, but it will go somewhere. So generally trading just daily charts, this big 1 to 3 with a good retracement to previous resistance and followed by a 2 to 3 line break. This is the 2 to 3 line, we call it like that, right? This would give me an entry here on a daily chart. Okay, but if I look at my whole chart, I already know that after the trend change coming from the weekly chart, which was somewhere back here, right? The first setups, even on the weekly, let me go back to the daily just for you to see the weekly break, happened here. And after that, price already moved and moved and moved million times, creating more 1, 2, 3s all the time. Do you see that? Guys? Okay, so we got 1, 2, 3s, big 1, 2, 3s on the daily chart. Got one before the break, an aggressive one or an early one. We got one afterwards. We got ranges to the 12, and then another one to the 36, and another one, and another one, and another one. So in a powerful trend, this is going and going and going. Now, we are not stupid saying that, okay, look, daily 1, 2, 3, let's go in like that. We can do this without being stupid, right? But we have to consider one thing, that the more 1, 2, 3s I got after a break in the trend direction, the bigger the chance that this will at some point turn against me and change direction again. Does it make sense? Of course. So some people, as you said, are afraid of getting in late. There's a cure for that. You either get in using lower time frames, therefore smaller stop and bigger chance of making profits before it's turning against you, or you just risk less in percentage, and if it goes against you, no harm done. Okay? Things are really that simple. It's not complicated at all. It's all in the mind. Now, if that happens, but I sense, look, it's bouncing, it's spiking, I want to get in there. Okay? And I have a 1, 2, 3 with a retracement of more than 50%. Price went down 1,100 pips. It retraced 800, so that's more than 50%. Yeah? Broke the 36, but in the end it broke the 2 to 3 line and it moved lower. All the other higher time frames agree that this is still short, so you really can only trade shorts. You should only trade shorts or don't touch it. Okay? Most mistakes people do is they try to catch the retracements. You can do that, not today, but you can. Okay? Why? Because we want to feel secure. Okay, it moved already so many times, or it's down here, it has to go up. So we start snatching a few profits on the retracement, but if you don't catch them right, or you don't place a stop, and this is a powerful trend, it will always kill you in the end. Yeah? So what you need to do is you either follow the main trend and catch the entries at areas of resistance or trend lines that you have drawn, so you get trades in the profit zone and look for setups then, or you don't touch it at all. That's the way to do it. So a 1, 2, 3 is this. It would be a late 1, 2, 3. Where would be the entry? It would be after the close of that candle. That means that in my time zone, it would be like 1 o'clock at night. Good stuff. It's a 24-hour candle anyway, right? Or what is it? So what happens is, if I go to sleep and this is going to close here, I could enter the trade even 2 hours early, because in 2 hours nothing will change. Yeah, it maybe moves a little bit up or down, but the direction of the candle won't change. It's a daily candle. So it doesn't matter if you would get in 2 hours before the candle is closing. It's not a 1 hourly or 2 hourly candle. It's not a 4 hourly candle. It's a daily candle. It's a big one. Yeah. So according to the rules, you have to get in there at my one, I think it's 11 o'clock London time, PM, right? So if that candle is closing after the 2 to 3 line break, I have a short entry, and that would be here. Close of that candle. Let me make it bigger for you. The close of that candle. It should open high and close much lower. That's the trick. Seeing the candle change, color change, and the 2 to 3 line break change after it get rejected at resistance at 36 or the trend line. Okay, so when that is closed, immediately this will open when it's closed. So at the close of that one, you would go in. Price could go against you next day. It doesn't matter, because your stop is always where? Does the stop go? I'm asking now the more experienced people. Above 0.3. 0.3 is the highest point of the 1, 2, 3. And that is here. And on a daily chart or 4-hourly chart, you will place a stop between 20 and 30 pips above it. Yeah, average somewhere here. Sometimes maybe even a little bit higher if it looks too close. Often price does that, plays around ranges and then goes down. So if you have a stop too close, it will kick you out. So the close of that candle will happen, let's say, depending on the broker you have, at night. My time, it will be at night. Maybe in your area it will be at day. Yeah, still day. But if you have a US broker, you probably, the candle will also close, I guess, your night. Yeah, that makes sense. So when the daily candle is closing, you get in. Okay? And the place has to be over, the stop has to be over there if you trade directly off a daily chart. Now some people start saying, hey, are you crazy? That's a huge stop of 300 pips. Doesn't matter, because we calculate in percentage. And if you have, I don't know, a $10,000 account, you have to go down to mini lots, sometimes even to micro lots if the stop is too big and you want to do the higher time frames. Because you are not in here, you're not taking a daily chart entry to make 10 pips. You would get in here because your target is at least 2 times the stop. Okay, now we get to the first rules. Trading directly on a daily chart. We get to the lower time frames, guys. Right now I'm on the daily chart. It's not a huge stop loss if the percentage you put in as risk is only half or 1%. 1% is not huge, it's just 1%. It just looks big because of the pips, right? Of course, if you have only $100 account, forget it. Yeah, you cannot do this. So please, if somebody wants to trade swing trades and you don't have any money, it's not good. I tell you right up front. Okay, you cannot trade on a $100 or $200 account on a daily chart because you want to risk 1 or 2%. But if you have mini lots only, on a $200 account, 1 pip would be $1, right? More or less. So 200 pips would be the whole account. So no 100%, it would, no 1%, it would be 100%. So please make sure you get it right. Okay, so you either, first of all, I would assume everybody that is new does it on demo. Open a normal demo account with about like $10,000 to get used to the numbers. Okay, you go with your risk. I just said 1 or 2% max on the swing, and on the daily I will show you later on. Then it doesn't matter. Don't calculate the pips. Pips is just, you know, a way to calculate the numbers here. But the risk you calculate in money and percentage. Okay. So the next area of support is our horizontal line down here. And from here to here, it's 800 something pips. Now with a stop of about 300, would that cover the reason? Like, would we be able to trade here with a 300 pip stop if the target is almost 3 times that much? Yes, because the basic rules say when we enter somewhere, doesn't matter if it's early or late, this is very late, right? Our goal is 2 times the stop minimum. So if I have a stop of 100, I need at least a target of 200 to make the trade worth trading or trying. Okay, so my next area of support should be at least 2 times away. Yeah, 2 times bigger than the stop, the target. And in this case, it's exactly that, or a little bit more. Okay, now what we do, this whole trade, and I'm recording this so you don't have to remember at all. This whole trade we would split in 3 parts. Give you an example. If it says that I can risk $300 on this trade because my stop is so big, I have to open, let's say with a 100 pip stop, 1 pip is $1, for example. I could risk $300 now. What I do is I open 3 positions, risking $100 each. The same stop, of course. Everybody has that 100 pip stop. Okay? But the targets are now different. My stop, let's assume this is 100. My target would be first position 100 pips, second position 200 pips, that's twice the stop. Okay? Third position would be open, meaning that as long as price is creating lower lows and lower highs, 1 2 3s, 1 2 3s, 1 2 3s, and it's going down maybe even to the next area of support, as long as that happens, I only trail my stop over the previous 1 2 3. Okay? Give you another example. That's why I say you don't have to remember it. It's recording, I'm doing it again. Try to get rid of those lines one by one. It's always funny. I do it here. We start with the first 1 2 3 we got. We got lucky. There's a weekly trend line break. We see this huge 1 2 3. We see an entry here, and now we have a stop over here. Okay? I'll calculate. That's about 350, 60, 70 pips, whatever. Let's say 350 points, for example. I'll switch to my weekly chart at that point, finding my next area of support. That would be here. And the next one would be down here. Okay? Here's the entry after the break. And now we have this. We have a 2 to 3 line break. This is the lowest point. We have clean rules. There's no if or but. It's very simple. Okay? Price is bouncing. It's going down. It's breaking the 2 to 3 line. It's closing here. Okay, this candle is closing here. It's below the 36. It's a 1 to 3. We even have resistance up here with 3 touches. We have everything we need to get into the new direction. Okay so far? Okay. Now, we are in. I get rid of those lines to make it easier. Our target is 1 to 1, 2 to 1, and then we leave the remaining position running. And we trail it how? What is our trend following EMA? Which one? First of all, 36. Exactly. As long as a price in a powerful trend moves below the 36, okay, as long as this is happening, we can start trailing the stop over that line generally. But ideally what I want to see is price creating more 1 2 3s. 1 2 3, here's ranging. The 36 is slowly following. 1 2 3, 1 2 3, here you get another 1 2 3 with a lower low actually. And then price is creating a new low. And every time I see a new 1 2 3 with a lower low and a lower high, I like to start trailing it safely over this next 1 2 3 like that. Price is moving lower, okay. It's coming also back, retesting, then going lower, okay, trailing it. It's coming back, that's not staying above here in the end, going lower, I'll trail it a little bit. Oh, and now it's creating another 1 2 3 moving lower, I'll start trailing it. Okay? So what we want is to keep a swing position running, sometimes using the daily chart for weeks and months. And I don't know if people are right now here in the room, but we have traders that stay in for months and months and months, having hundreds and thousands of pips running positions, but calculating in percentage. So if I risk 300 to end up making, I don't know, 1,700, 2,000, 3,000, it's a great risk reward thing. Okay, and you can only track it on those higher time frames. If you would trail it on a lower time frame, it would kick you out immediately. If you would start, I'm not sure here. Let's say you are somewhere here and you say, oh great, let's trail it now here. Of course, on the retracement, it would kick you out, and then you have to check for new entries. Of course, yeah. Not that it's wrong to do it, but why should you want to get out of a trade that already goes your way? Always remember that question, okay? As long as something is going your way, no need to get out. First of all, you create a win-win scenario. You take one lot, you take the second lot. After taking the second lot out, you already made as much as you risked in the first place. Even if price decides the next day for whatever reason to go against you and kick you out, you're still not losing anything. And after you start trailing your, after the first 1 2 3, you start trailing your stop. It is into break even, or probably in the profit zone anyway. So if it gets stopped out, it gets stopped out with profits. Okay. So generally the general rule says we keep the remaining part as long as possible. Does that make sense? Yeah, there are many little things we can tweak this around, but we don't do it today. It's too much. I gave you so much information. It's just a lot. Okay? And again, you don't have to remember it. Just try to remember as much as you can, and then watch the video later on. Okay, 1 2 3s, 1 2 3. And price is moving lower. Now the difference between this entry and this entry is what? What's the difference between getting in here and getting in down here on the daily chart? It would be late. Every position, I'll answer these questions right now. Every position after the first one, after a break on a higher time frame, gets more risky because we never know how far it will go. Okay? But if the trend is powerful, in the end it will just follow through until the trend is changing. So the first setups we get on the higher time frames, we risk with our normal risk. Everything that comes late, we have to use tighter money management, risking less, half of it or third of it in percentage. You still open the 3 positions, but you risk less, okay, if you want to trade on that particular higher time frame. Okay. That brings us to step number 2. Are we okay with the daily chart? Because there's still a few things to cover. Now, when you see this happening, and you know there's a powerful trend line and price ended up here, but you don't want to take it on the daily because of that being late, and because you don't want to put a big stop and risk too much, because you don't know if it will go, and all the little because, ifs and buts. Okay, what you can do is looking for entries on the lower time frames. Everybody was waiting for that, correct? You can do it here or here, or whenever you get a 1 to 3 on the higher time frames, but you don't want to take it because they are late. You can always look for setups on the lower. You still need one thing. You still need the price to be at an area of resistance or support, so the profit zones I was talking about before. And you still need to see a higher time frame, in this case the daily chart, 2 to 3 line break. And you still need to see the price breaking that line. But instead of getting in on this time frame, you can try to get in on a lower time frame. Okay? Exactly. I just explained what is early and late. If you watch the video, we'll figure it out, okay? Early means the first setups after a trend line break coming from the higher time frame. A late setup is everything after the first. Okay, guys? So you get the 2 to 3 line break now, and you want to get in. Switch to your 4-hourly chart. From the daily to the 4-hourly. And guess what you are looking for now? After your 2 to 3 line break, which now on the 4-hourly looks like a trend line break. The 36 is here. Nothing changes. Everything we said is still working. We just changed the time frames. And now looking at it, this looks now like a trend line. It's the 2 to 3 line from the daily. We still have the daily trend line up here. The 36 has broken on that time frame. And guess what we are looking for after that break? What are we looking for? I need at least 80 more answers, just to make sure we're all on the same page. Exactly, right? We need a 1 to 3 or ABC. No idea, David. Good stuff. Doesn't matter. Really, if you watch the video later on, it will really start sinking in. Stefan says red. Sorry, what does that mean? I saw that a couple of times. What, you have a red screen or something? Okay. Yes, you will all get the link of the video. Probably even upload it to YouTube. It's probably easier for everybody. But live is of course better. But after being here live, then watching the video is a good thing. Yeah. Now what we want is another 1 to 3 setup. We always want to look for those 1 to 3s. And what do we get? Price breaking that, creating a new low, and then a lower high. We get even a 2 to 3 line break here. And we have resistance. We already have resistance from the daily. We know that it's here. And you can even draw a smoother line now on that 4-hourly chart that gives you 1, 2, 3 touches of resistance, because now we are looking for shorts, right? Okay, 1, 2, 3. What? Yeah, David, I got it. Sorry, I was laughing, silently. Um, okay, first lower high, and then price is breaking the 36, and another 1, 2, 3. Okay. Now what we want to see is a 2 to 3 line break candle. Here we go. Opening higher, closing lower. It's not a perfect one, but it is closing lower. So you have an entry. This one looks even better down here, but this one has for sure a smaller stop. Where does the stop go? Over 0.3. The highest point on this 1 to 3 is not here. It's that spike. So we place it over here. Yeah, because if there was a spike before, there might happen a spike afterwards again, so we never know. Have it in a secure place. Don't get too cheap on the stops. And then you have yourself an entry. You can go in there. And what about the targets? You already know on the higher time frame that you had a low on the daily chart, and we have all the horizontal lines here. But even if you would choose just the previous low, it's a good area of support when you get in here on the lower time frame, right? So on the daily, here would be the target. So I have a stop here of about 130 pips still on the 4-hourly chart, but my line is 500 pips away. So was that a good one? Could we have taken it? Taking out one lot at 100 something, as I said. Second lot, and then the third one running. If it wants to break those as well, it moves lower. You can take it now that you entered on the 4-hourly and just trail the 1 to 3s and the 36 on this time frame to make it work. Okay. 4-hourly charts, meaning one candle every 4 hours. Now if you wake up London open, sometimes you get nice 4-hourly 2 to 3 line break candles. Also in the US session, also in Asian sessions. If you miss them or you miss out and you cannot trade the 4-hourly now, what else could you do? Look, we go here step by step. I really give you the whole basic system. Exactly, you can go to the next time frame, which for us is the 1-hourly chart. Maybe you find some setups after that 4-hourly or at that break before or after here, wherever. So I'll check. We'll still want to get the setup close to that 2 to 3 line break coming from the daily. Yeah. Here's your previous 4-hourly 1 to 3. So what I see here is only one 1-hourly 1 to 3. 1, 2, 3. Okay. And this candle, I don't even know where it closed. It's not visible here. It has a big spike, but it must have closed higher somewhere here. You have an entry here on the 1-hourly, no problem. In this case, the stop is a little bit smaller. And then you can look for entries. Same story. Entry would be here. Stop would be over 0.3. Okay. And look at it. If it's spiking like that, that's why we need the stops to be over those points. We don't want them exactly over it 1 or 2 pips. We want at least 15, 20, 25 pips, depending on where our powerful trend line is, to make it visibly nice. Yeah. That's why I said on a daily starting with at least 30 pips. At least, not 5 or 10. Not good. Okay? Then let it go wherever it wants to go. Even if you have the stop, let's say, closer, and you get stopped out, sometimes it will do this. In this case, we had some news announcement. It already moved down. If you get lucky, 1 lot is out or 2 lots are out, and then you get stopped out, also okay. Yeah, if something funny happens. But try to have the stop over an existing powerful trend line. Very, very important. Okay? Just 1 second. Okay, Now, we got from the weekly to the daily, from the daily to the 4-hourly, from the 4-hourly to the 1-hourly, still doing the same thing. Okay? 1 to 3s. If that one we miss, we might get one on the 1-hourly chart. Okay? According to your plan, if you miss something out, you just leave it. You don't hunt it. You don't chase it. If you missed that, you don't go in down here. Okay? You always want to try to get setups here after 1 to 3s on the 1-hourly or the 4-hourly. And if you don't have time to do it, right, or you have to leave, you could also place orders. You could say, look, I want to trade only one pair, but maybe I don't get the setups live. So what I do, price is still up here, right? Let's say on the 4-hourly chart, it's somewhere up here. But you know that if it breaks a 2 to 3 line, down here, okay, if it breaks that line and I get into that, I get an entry somewhere. It's not perfect because we don't really see where the close is going to happen, but we assume that if it breaks, it might go lower. So what you can do before you go to work, you just place an order to sell below here, okay, and you have your stop over that point already in place. And if price wants to go down, it will place your trade in. When you come back from work, maybe you get lucky already. Okay? And that way, the way you do it, you have to actually place an order. Yeah, depending on what software you're using, you'll figure it out. Do that on a daily chart, on the 4-hourly chart, or on the 1-hourly chart to start with, just to get an idea how to trade on one pair, how to get the behavior, to understand the behavior. You have to fight with your emotions, the greed and the fear, and oh man, one pair, let's look at something else, maybe there is something. This is not easy to do, but it is really worth it. Guarantee. It's really, really worth it. You can put a sell exactly order or buy order, depending if it's short or long, of course, as I said before, but try to figure it out. You can also combine it with 5-minute charts. Next step, meaning, and you might want to write it down because we are finishing soon. It's almost 3 hours. Okay, what you want to do is every time you get a 4-hourly or 1-hourly 1 to 3, okay, and you see that break happening, let's say you see that live, but you still don't want to take it because it's not the first. Maybe you get a 4-hourly down here, 1-hourly, and you're like, down here is very late. I don't even have a good retracement. I don't know if I want to take this one. Ideally, you want to look for retracements to the 36. Okay. You can still switch, as I said, to the 1-hourly chart. If you don't catch anything there or it doesn't look good on the 1-hourly, here it looks a little bit weird. You get the break on this candle, but it's not easy to spot. You can still combine 4-hourly and 1-hourly charts with a 5-minute or 15-minute charts to enter. Meaning, again, but watch the video, you will not remember all that. Okay. What I mean is, this is your trend line coming from the 1-hourly and 4-hourly chart. That's the 4-hourly and 1-hourly 2 to 3 line break on this steep, weird retracement. But what you get here on that 5-minute chart is a setup. 1, 2, 3. And it is again the first setup after that break of that 1-hourly line touching the 36 on the 1-hourly. And what happens after that one here? You have your resistance, you have an entry. Now you have an entry on the 5-minute chart and you have a stop over 0.3, but now the stop is much smaller, 30 pips. Okay? What you do? Take out your 30, take out the 60, leave the last lot running, which today still would be like 150 pips. with a 30 pips stop. Okay, makes sense? So you can combine daily charts, recap, getting in immediately with a daily. You don't like it because it's late, you did the top-down approach, 4 hourly. You can get in here. You didn't catch it because it was late, you see something weird like that, 1 2 3 but no big retracement, or too late, 1 hourly. Or combining 4 hourly with 5 or 50 minute. 4 hourly, 1 hourly looks like that. 1 hourly looks like this, so you can get in here, or switching after the 2 to 3 line break again directly to a 5 minute or 50 minute, looking for a setup below that break, 1 2 3, getting in as well. Okay, now guys, this is the whole basic system squeezed into one session. Not easy. Yeah, and depending on how the chart looks, it's not always like that. Sometimes it's easier, it looks like textbook stuff, and sometimes it's not that easy. That's why we need practicing. Okay, so do we have any questions about 1 2 3s, about the entry or the stop, and the first, second position, and how to trail the third one depending on the time frame you want to trade? Only the basic stuff. We're not going into much detail today. Just want to know if that is okay so far. Because if, okay, then what happens? You have to practice. What I would suggest everybody starts practicing the top-down approach first. Don't even think about the trading for 1 or 2 days. Okay, take the pair that you like, do the top-down approach, go from the weekly to the daily, from the daily to the 4 hourly, 4 hourly, 1 hourly. Look for setups. Okay, these are basic setups. Now this strategy, trading one pair, is not only 1 2 3s. Yeah, I will explain soon in 2 minutes. But to get used to it, you have to start with something. You can trade it everywhere, right? It doesn't matter what. So what you need to see is the trend, is the setups, the trend lines, horizontal support and resistance, the good retracements, ideally back to the 1 2 3. Okay, the first setups after higher time frame trend line breaks. On the daily and 4 hourly charts, the 2 to 3 line breaks, and then the setups on the lower time frames, 4 hourly or 1 hourly. And if that is not good for you, or you missed it, then you can watch for the 5 minute or 50 minute setups again, but after the immediate break, because you want to catch a trend early. Early means after the 2 to 3 line breaks or after the trend line breaks. It will make sense after you watching, especially this second video a couple of times. Okay, do 3 lots to start with, or 2 lots if you want to take 1 lot out and leave the last one running for now. Okay, now to get it really, to make it really powerful for everybody, okay, really powerful for everybody, you have to start practicing ideally from tomorrow. You can still do whatever you do, have it as a second exercise to try to trade one pair only, trying to see the 1 2 3s. Even if you don't want to trade them, just look at them a couple of days so it sinks in. Look at the chart, how it looks after day, what happened on the daily, 4 hourly, 1 hourly chart, for instance. Okay, and then what you do then, you start trading it either, or you paper trade it. You start trading a basic plan and try to follow it. Okay, it won't be 100% perfect, but you will get the idea and you will see the power of it. And after doing that for a couple of weeks, you will get good at seeing things on the chart, seeing the setup, seeing the volatility, seeing what is early, what is late, what it means to get in late or early. Okay, and then what we do, uh, we meet in about a month, first week of September, okay, where we do a workshop that will last a month, not 1 or 2 days. It will last a month, and we meet once a week, trading only one pair. Okay, so we'll meet, let's say, Tuesdays, look at the pair we want to trade. Maybe we have all the different one. It's okay. Okay, we'll choose also one together here that we trade together. Okay, and then we take every trade we can get our hands on it, but all the strategies combined now. Meaning, we do the 1, 2, 3s. We do scalping. We do swing trading and day trading. We do breakouts. We do bounces. Everything. How much, Luca, is what goes right to business? About $1 million just for you. Okay? So we combine it all. And then we meet every week on Tuesday and see what we have done the week before. What setups we had, which one worked out, which not, why, what to improve, what to change. Okay? Next week again. And we do that together. So what we do, we learn all the strategies that we can use on this one pair. Okay? We'll combine it with the psychology, the mental part, how to make it easier for everybody, not to freak out when you get a couple of losses. Okay, how to make that back, which doesn't sound good. Yeah, if you have some losses, how to grow the account, how to make it work so that when you focus on one pair, it can only go up or down. So you have to get somewhere in, and then just make sure you don't get out too fast. Or if it's turning, then you have to get out and do something else. You have to reverse. Okay? But when you start looking at this for that month, for August, okay, you'll have an idea. So you will be prepared, and that it won't be that difficult. And we will spending the whole month every week with you, which usually we do something like that. It's really expensive because there is work involved, and we're also trading and checking our own pairs so we can get it all done. I have the link here, guys. Okay, I just wanted to explain to you. Okay, I wanted to explain what we do, and we thought with Jeff we do it like for everybody that joined today. We give you, I have to spam you now, guys, but it's for a good reason. Okay, the link should be in the box below. We also send you emails, and that's how we call that thing. Okay, and the link will be there. What we have, instead of going to 247 and initially then to $300 for the first week, we keep it 197, and this price will only be for the guys that are here right now. So you will not find this on the website or somewhere. We'll start at 247. Okay? So right now it's 197 if you want in. So was good spamming, I guess. But it's for good reason, and it is very, very powerful. It's one of the most powerful exercises. I was trading, as I said, GBP, JPY between 2000. Let me go back to those charts for you. 2007. In 2009. Okay, so here we go. You see this? 6, 7, and was up, and then it started going down and going down, and even the move up in 2009 was still good, powerful. We had moves, guys, here like 1,500 pips sometimes in a day. Setups on all time frames, all kind of bounces, breakouts, 1, 2, 3s, all over the place. Okay, you get really good at understanding the behavior one pair. You get really good in As I said, not controlling, but guiding your emotions, not getting too attached to what you do. Um, it's very, very powerful, yeah, to trade one pair for a while, getting good at this. And as I said, I have traders that didn't change that. They're still trading one product. Sometimes Forex, sometimes some stock, just because they like to do it. Some people just do the Dow or the DAX, or I don't know, in the morning, US Open or Europe Open, trade whatever they can get their hands on, and then that's it. They don't touch it anymore. So all kind of strategies, all kind of strategies. But it's very, very easy to do when you get the hang of it. And right now, please do me a favor. Don't take it as something, okay, we learned something today, let's look at something else. Okay, don't do it like this. Really try to get into the basics, understand what the big traders do, the big institutions trading those higher time frames, seeing what's really going on the chart, the real direction, and then using the trend lines and the lower time frames to find the areas where prices are breaking lines or bouncing off it, to look for the trades. That's the real trick of long-term trading success. No joke. Okay, everything else is mostly like, too much noise and colors. Yeah, do we have any other questions, guys? Because we should really stop. It's like 3 hours. Yeah, we'll be together, as I said, like 5 weeks, 5 classes. Jeff will also have his own way on looking at things. He will also cover it with you. It's not only me. As I said, you place your stop at break even after. I'll give you an example on one chart. Let's say you have a 1, 2, 3 here, okay? You got into that one. You have an entry here, and you have a stop over here. Target 1 hit, target 2 hit. When you want to trade on the 4-hourly chart, to keep it really basic today, okay, you want to see the price breathing in, breathing out before you start trading something. It went to target 1. Don't trail it immediately just because it went to target 1. Don't put it to break even or to the too close to the price, right? Try to trail it over the 36 or over an existing trend line. And if you get another 1, 2, 3 and price creates a lower low, then you start trailing it, like here, and then like here, and then like here. And at that point you get stopped out here with whatever profits are remaining, if you would trail it just on the 4-hourly and not doing anything else on the lower time frames. For right now, it's enough. There are many ways to change that and get out earlier, but not for now. Just doing this is already so powerful, you cannot imagine. Very, very powerful. Okay? You can trail it wherever you trade on right now. It doesn't matter, as long as you understand the basics. Okay, great. Yes, we also cover that. I have a question. How do you control the greed? By having great money management rules that you do not violate, and following all the strategy rules that you have written on paper. And there are some tricks to do that. Yeah, we'll go over everything when we do it live. It's too much, guys. Look, we are here. I planned for that 1.5 hours, and it took us 3. Okay, so and we covered more than I thought we would. So what you can do, a good question here, when you trade one pair, get rid of all the others, have a weekly, a daily, a 4-hourly, and a 1-hourly running like 4 charts. And if you look for lower time frame entries, you can still change the 1-hourly chart to something smaller. Okay, very simple. Hey, great. Thanks for the feedback. Great. So, guys, did you like that today? Was it good or was it too much? Okay, that sounds good. Yeah, I like that. Great, great, great. Perfect. Yeah, that makes me feel good as well. This kind of feedback here. Wow. Yeah, it is too much for some people for sure. It is just a lot of information. But yeah, you can digest slowly. We have time. That's a good thing. I really thought it's August. Sometimes August is the slow time. People are on vacation, so you can really spend 1 month. It will make your head burn or get the steam out of the ears for sure, but for good reason. Okay, and you don't have to understand it, and it doesn't have to work perfect. You just need to get the idea. If you get like 20% of what I said today, I'm already happy by September. Okay, so you have a full month to prepare for this. Yeah, take your time, really. Okay, great. So anything else, or should we really call it a day? Yes, do that, please. Yeah. Yeah, you're welcome. Great, great. Yeah, you will get emails. Yeah, we'll spam you good with us. We'll spam you with sending you emails about the event. Yes, Renko's also. Yeah, Renko is a powerful tool as well. You can use this as well, but I don't know. We can try. You know what? If we have this month and we are getting fast and we see people are getting the hang of it, we could add some Renko charts to it and give you the strategies for Renko as well. If not, we can do Renko like in October, month later, a couple of weeks later. Okay, guys, great, great. Yeah, it's a really great team. I'm really happy that everybody is so active and replying. And uh, our goal is really that long term that you make good profits, that you're happy with your results, that you feel good when you trade, that you have a positive mindset, smile, have good goals. It's about having goals, short-term goals, long-term goals. We will all go over that, in much detail when we do this. The psychology is in the end 90% or more. At the beginning, it's technical, but when you get good at this, it all turns around and then it's all in the head. And there are a lot of filters that will help you, some exercises that will help you figure this out. Okay? Yes, look, the software we're using in order to make it work fine, it's like 100 people. Like today we had, I think, 600 people trying to log in here. Okay, and we have only 100 seats, but it is recorded. So yeah, also for the live event, it's 100 seats. Uh, I think Jeff, it's 100, right? Or is it less? I think it's 100 because the live, well, it doesn't really matter. It's always the same. It's about 100 seats. Yeah. Okay, guys. If you have any questions, you can still go, send us emails. Go to the website, spartantraderfx.com, send some emails, um, requirements, whatever you need. We are here for you, okay? Yes, many voices in my head. I get this, yeah, for sure. If you're a beginner, it's a good thing to do actually, right? To focus on one pair. It's very, very, very good. So do this exercise, please. But also every experienced trader can take a lot of advantage here doing this. Okay, and I have prepared so many things for that. Also, my history on those parts, what I did and when I did it, what I did wrong and right. I will share that all with you. We never hide anything. We have it all here ready for you. Okay, yes, we'll do this. Okay, okay. Yeah, we have a lot of questions about Renkos. We do that again. Yeah, we do that live as well. Okay, guys, have a great night, great day, wherever you are. Enjoy the month. Here it's summertime, and soon we talk again. Okay? Thank you for being great. We catch up with you soon, and bye for now.